What's going on, everybody? Welcome back to the channel. Feels good to finally be back in the office. As you can tell from my background, yes, I'm finally back from a vacation over 2 months in Italy.
Finally, The Rock has come back! Home.
To be with my training, it's honestly why I got into training to begin with was that financial freedom and just being able to travel. With a regular job, there's pretty much no way you can take a 2-month vacation in Italy or anywhere that you want because you have to go back to your job, correct? So that's a little bit of motivation. If you want to travel the world, guys, master trading, you'll be able to get there. Anyway, let's talk about today's video. I'll talk about how can I help people with a small account. How are you able to make $100 a day with a small account if you don't have a lot of money? Right, we're going to talk about how I'm actually going to give you a strategy. I'm going to go into charts and show you a couple strategies, a couple key things that you need to learn to be able to do so, a couple things to master. And first, let's talk about $100 a day. I don't want you guys to set a goal. I need to make $100 a day. I need you to set a goal of an average of $100 a day over a month. So let's say one day, there is no trading because you don't have your good setups, you have good setups that you see. Don't force yourself to trade. For example, you can take a trade the next day, maybe you make $250, right? And then I kind of averages it out. And so I don't want you guys to be, you need to be exactly $100, right? Be a little bit flexible. And that's going to be the first rule that I need to tell you guys about. But before we get into the rest, make sure you leave a like, subscribe down below. Let me know in the comments. I'm back, I'm grinding, I'm making videos. I want to know what you guys want to see. Make sure you've read that down below. And if you're trading with me live every single day, go watch my free Twitch streams. Or if you really follow all my trades for real and get text alerts, hit the Discord down below. Anyway, so let's talk about the second rule I'm going to give you before we jump into the charts. I'm going to give you guys a handful of rules I need you guys to follow, and then go ahead and study the chart. Rule number 2 is understanding the size of the account that you need. I think you got to have at least $1,500 to $2,000 at the very least on the low end to make $100 a day consistently. Unfortunately, if you have $500, making $100 a day, it's very difficult, especially if you're under the PDT rule. You just will not have much to trade with. So I would maybe start with a goal of $25 to $50 a day and slowly scale yourself out. So I just want to put those perspective there. Don't hit $200, you can make $100 a day. Be very, very unlikely unless you full port every single thing. And I kind of hope to get lucky. Set yourself weekly and monthly goals versus daily. Make sure you have at least a little bit of money that you can play with, not a tiny account. Now let's go jump into the charts, and I'm going to show you guys some of the strategy that you need to be doing and understanding when you're trading. So here we can see from my chart, we have a Tesla on a daily time frame. The first thing I want to tell you is that you should be sticking to day trading, in my opinion. Swing trading, I think it's very difficult to do if you have a very small account. Now, it's not impossible, but I think that day trading and sticking to trades you can close within the same day is going to be the most ideal, because a lot of beginners, if you're looking for to make $100 a day, you're probably more than like a beginner. Whenever you swing trade, it could be news that you did not account for or something could just trade count overnight. At least if you're day trading, you can minimize the risk as much as possible. One rule I'm going to give you is not trade the first 50 minutes a day. Those, if you go to the 5-minute time frame here, you will see that the first 50 minutes a day, now no longer over here, right? This first 50 minutes a day will be the most volatile. In this case, you see this big green candle and we're going higher. This first 50 minutes a day is very, very dangerous for beginners. If they get caught in the wrong area, they can get completely destroyed. You guys can see always here, the first 50 minutes or so are extremely extremely volatile, as you guys can see. If you're trading with a small account, you want to prioritize not losing your account because you don't have that much to work with. So for example, to give you an example is, what would you done here? Can you tell me that this is the market open 9:30 here, right? 9:35. If I'll tell you for 9:35, right? I'm not trading till 9:45. What entry should I look for? Actually, you should look for retests of whatever that first 15-minute candle is. A really solid strategy that you can take is drawing levels on whatever that first 15-minute candle take on what we call a fair value gap. So now if I get my rectangle tool right here on the side, you can see that this is the very first 15-minute candle day, the 9:30, right? And this is the 9:45. You want to draw a rectangle that covers from the previous candle low, so in this case it will be right here, right, this previous candle low, to the previous candle high. So this is 9:30, this is the 9:45 candle, right? If we were, boom, right there, this is where the candle would have opened, right around right here, right? So that first 50 minute, you can zoom it in now on the 5, go to the 5. You can see right here, and now fix this. Okay, we see that this would have been from here, to here, right there. So now you see this is the 15-minute. Now we went on the 5-minute, and we fixed the 5-minute was closes right here, and the open this one was right here. So now we filled what we call a fair value gap, or where liquidity was created on the move down. So now what you want to look for is a counter trend, right? Counter trend move that hits that level, and then take a short position after a level gets filled. So you see this yellow box, you close into it. So you would have taken a short position, it would look something like this. You take a short position right here, stop loss above the high of that candle, so it would have been this, and then you target the next level. That leads me to the next point, the previous day closing, which is this purple dotted line. So that would have been kind of your what the move that you would look for. This purple line, I said yellow. If you go to settings here, it's called the previous day. Let me go right. It should be random symbol. Right, a previous day close. So previous day close is always going to be a level of interest you're going to look for bounces or rejection off of. Now, since you gapped up above, right, you looked for this as a potential price target, and as you can tell, it did bounce on it briefly, but then continue lower, and that's why you take partial profit. And if you nail the bottom, it would have been insane 1 to 7 risk to reward trade. So what you're doing here is you're not fighting the trend. You're letting the first 15-minute, which is the most volatile, playing out, and then looking for the counter trend for a good entry, good risk to reward without chasing the move to get very limited risk, very nice reward. And now that lead me to another tool, which is my Fibonacci tool. Take the Fibonacci tool from that's the wrong one actually. This is up here. You take it from the top of that move, which was that 15-minute candle, 9:30 candle, to that bottom of that move, which would have been roughly right here. And you look for where is your golden pocket. In this case, the golden pocket almost lined up, right, where the candlestick width. It's always going to be an exact size, but pretty damn close. If you're anywhere between the 0.5 to the golden pocket area, it's a solid entry. And now we're getting two things in combination: that fair value gap fill, the liquidity being filled, as well as its golden pocket being retraced. And if you're not familiar with the golden pocket, it is a Fibonacci tool. Pretty much says, hey, if the move goes one direction, then you want to retracement to that golden pocket level and then continue to move wherever the move is. In this case, it was a downturn. Now, if you are wondering, hey, why does your golden pocket look like this? And mine looks all crazy. Go to settings, turn off everything, just keep 0.66, 0.618, it's a golden pocket level, and then the 0.5 level, right? So now we get a combination of this together will give us a nice safe trade with a risk to reward. Now, you see this move here was about, let's go and see here. Move here was about a 2% move on Tesla, which is definitely very nice, but 2% will not get you rich. But now you use the power options. This move would have moved around 50% on the option chain in Tesla, which means this 2% move would have made you a 50% gain if you traded, if you had options. Now, let's say you put in $200 because options usually cost less than $500. So you had a $300 option, you could have made $450. Really nice gain here if you just held it the whole way through. Now you may be wondering, does this work every single time on every single stock? No, of course it doesn't, guys, but it is a strategy you can use or you can put in your toolbox that is very safe that you can do with a small account. Let's, for example, take a look at the QQQ. We'll go to QQQ, the 15-minute. And if I was you, I would trade a couple stocks looking for this type of setups and see, and see how well this would have worked. So go here, this is the 9:15, then 30 candles right here, and then 45. So 9:15 to here, we'll draw that out, 5-minute. And as you can see here, 9:30 candle, down to the 9:45 candle, which would have been 40. The low would have been here, from 9:40 to 9:45. And then you fix this to here, right? So you have the halfway, you hit the halfway to the golden pocket area, which is the area we talked about. You see this would have been the candle, and this would have been the bottom candle. So right here, this whole area, you see, bottom candle, this is the fair value gap, gets hit, and you take a short position. Let's say you take it right in the middle. When it hits, target this level, stop loss above this level, and a nice one to risk reward, which hit, eventually played off. Right, so again, you saw on two examples on when it worked that I didn't even know often it worked. I didn't go back and check this. I just literally showing you guys on random examples. So check 3 different days, 2 times it worked, 1 time it didn't. There was no setup, so you just were not taking a trade on it. And it was a pretty nice entry with limited risk and following your plan. So This is a strategy that I would use if I was using a $100 account in a combination of Fibonacci, the fair value gap where liquidity it was taken, time zone, which is staying away from the 9:45, 9:30 to 9:45 open because the volatility could destroy your account, and trading with the trend, right? Looking for the retest and continue for the trend fall. So you have a lot of things in your favor to grow the account. So hope this video helped. Hope you learned something from it. Even if you're not a follow the strategy, but at least you hope you learn how to use a couple of these tools. And if you like this video and learn more stock market in the crypto market, as always, peace.